Gold went through a long consolidation from 2011 to 2024, where it kind of traded between 1,500 and 2,000 up and down. But that was after the big breakout from 2001 to 2011, where gold went from sub 300 to almost 2,000, about 1,900. So we've consolidated those gains. We broke out this year. I don't think gold's going back to 2,000. I think that's a history now. And we're off, to much higher levels without any resistance. So I think the price of gold can double, can triple from here and potentially go much higher than that.
24 years into the 21st century, gold has seen its value multiply 11-fold in dollar terms, mirroring similar growth across various global currencies. Yet, remarkably, only 0.5% of global financial assets are allocated to gold. This marks a modest rise from just 0.2% in 2001, highlighting gold's underrepresentation despite its strong performance. Renowned financial advisor Peter Schiff remains highly optimistic about gold's trajectory, describing it as having entered uncharted territory following a prolonged consolidation from 2011 to 2024. Schiff predicts gold prices could double or even triple with minimal resistance ahead. Addressing concerns about gold's recent upward momentum, he dismissed notions of an overextended rally, emphasizing its steady, measured climb and highlighting its substantial outperformance over major stock indexes since 2001. While the 2000s witnessed a bullish stock market, gold quietly surpassed equities in returns. Over the last 24 years, the S&P 500 index has grown 572%, but gold has soared an impressive 990%, with significantly lower volatility. This extraordinary performance remains a well-kept secret, with even seasoned investors often unaware of gold's near 1,000% increase this century. Despite gold's success, gold mining stocks have lagged behind. Currently, they are undervalued, sitting 15% below their pre-Trump election levels, even as gold itself remains near its peak. Schiff attributes this discrepancy to tepid investor interest, with attention diverted to assets like Bitcoin and tech stocks. While gold attracts investors due to its resilience, the inherent volatility of the mining sector makes gold stocks a challenging proposition. Schiff also pointed out that central banks in nations like China and India have been major buyers of gold, reinforcing its appeal. He foresees a shift in sentiment as rising gold prices transform skepticism into enthusiasm, likely reigniting interest in mining stocks.
Gold went through a long consolidation from 2011 to 2024, where it kind of traded between 1,500 and 2,000 up and down. But that was after the big breakout from 2001 to 2011, where gold went from sub 300 to almost 2,000, about 1,900. So we've consolidated those gains. We broke out this year. I don't think gold's going back to 2,000. I think that's a history now. And we're off, to much higher levels without any resistance. So I think the price of gold can double, can triple from here and potentially go much higher than that. Prior to the election of Trump, we were on track for the biggest percentage gain in gold since 1979. Now, we still might get back on track for that, depends on how December goes. But even if it's not as, the best since 1979, it's one of the best years. Gold's up about 30%. And more significantly, so far this century or millennium, since January of 2001, gold has outperformed the S&P. In fact, it's outperformed all the major stock market indexes. In fact, you can go back to 1999 from the bottom of gold, when gold was, close to 250, and it's outperformed everything since 1999. So you're talking about close to 25 years where gold has beaten the stock market, yet there's no euphoria for gold. There's plenty of euphoria in the stock market. Nobody cares about risk there. But take a look at what's happened to gold stocks. Gold stocks are still down 15% from where they were 2 weeks ago. Just before Trump was elected. Gold itself is down less than 3% from its peak. And it's barely down. I think it closed Friday at 27.15. When Trump was elected, maybe it was $27.50, down $35. That's it. Well, I just think there's not a lot of conviction in gold. And I think that the investors who might normally be buying gold stocks, are buying Bitcoin ETFs, or they're buying MicroStrategy. Remember, retail investors have been selling gold all year. And the selling was particularly strong early in the year when people thought that 2000 was the top, and so people wanted out. The reason the price of gold has been going up is because foreign central banks have been buying. And obviously they know something that the typical retail investor doesn't. They're wasting their time on fool's gold, but they're buying the real thing. You do probably have the Chinese, consumers. They're buying, or in India. But I think at some point the price of gold is going to rise high enough that greed is going to start to replace fear in the market. And then you're going to start to see investor interest really picking up in the mining stocks. And I think they have a long way to go just to catch up to where they should be, let alone to get ahead of the curve, which ultimately they will. The gold stocks will start anticipating higher future gold prices and pricing that in to the present stock price. So we haven't gotten anywhere near that yet, but it's coming. I think that's basically treason on the part of Loomis to try to say we should squander our gold assets on Bitcoin. It'd be one thing to just even recommend buying Bitcoin, but to pay for it by selling our gold. But, she wants to say it's not going to cost the taxpayer money because we're just going to sell this worthless gold, that we, just gathering dust at Fort Knox. We'll just sell that. But of course, it's going to be highly inflationary because now the people who own Bitcoin, who sell it to the U.S. government, have a lot of cash to go out and buy stuff. But at the end of the day, Bitcoin is not a viable reserve, because what makes gold a good reserve is that if the U.S. government ever needed to sell the gold in an emergency to prop up the dollar, there is a very deep liquid market that could easily absorb the selling. But if the U.S. government tried to sell a significant quantity of Bitcoin, the market would crash. In fact, the only reason that Bitcoin is, knocking on the door of 100,000 and probably going to be through by the time anybody sees the interview, right? Yeah. But the only reason it's there is because everybody expects the U.S. government to buy millions of Bitcoin, to spend billions and billions of dollars, waste taxpayer money, which I think is really the ultimate irony, because Bitcoin was created as supposedly this is the alternative to government, where it's decentralized, we're rejecting fiat money and government. Yet now it's completely dependent on government, because it's the government that's creating all the demand. And so it's not that the free market is choosing Bitcoin, it's that government is using the coercive power of the state to basically force people to buy Bitcoin. Because when the U.S. government buys Bitcoin, I'm an American citizen. I'm not choosing to have my tax dollars used to buy Bitcoin, right? The government is doing that against my will. But what's happened is you had all the money in the Bitcoin industry, the crypto industry, was able to corrupt all these politicians by donating to their campaigns and funding them. And the payback, right, with the return on that investment that they're looking for is the government to buy Bitcoin. They also want the government to make the gains on Bitcoin tax-free so they can sell all their Bitcoin to the U.S. government and pay zero taxes on the gain. So it's a great deal for them, but it's a disaster for the country. Hopefully, Donald Trump, stands up to this and doesn't sell out the country. Well, it's already at current market value. Everybody knows what it's worth. Nobody claims that it's $42 an ounce, and the government certainly wouldn't sell it for $42.22. It just shows you how much value the dollar has lost since we went off the gold standard. Now you need $2,700 to buy what you could have bought for $42. And in fact, you could have bought it for $35 in 1971 when we closed the gold window. So that price doesn't mean anything, and it doesn't create some kind of windfall to say, oh, let's value it at the market and then sell it, get rid of our gold. Right. That would be the worst monetary mistake the U.S. could make. Remember, the British sold a bunch of their gold back in 2000. They marked a low. They sold out about $250 an ounce. Now, certainly, it's higher price now, but given all the inflation that's been created and will be created, makes no sense to sell it, especially if the goal is to buy Bitcoin instead of gold. Yeah. Because Bitcoin has none of the attributes that give gold its value. It's counterfeit gold. I said it's fool's gold. And it would be horrible if the U.S. Taxpayer, American public, was the final bag holder in Bitcoin. The exit strategy for the guys that got in early in this Ponzi pyramid chain letter, however you want to describe it, they ran out of chain in the free market. They got Wall Street involved with all the ETFs, but that couldn't do it. And that I think if Trump had lost this race, Bitcoin would be collapsing right now. So rather than being, almost at 100,000, we'd probably be below 50,000 and falling fast.
As we look ahead, it's clear that gold is entering a new phase, breaking free from its decade-long consolidation and pushing into uncharted territory. With central banks around the globe ramping up their purchases and retail investors gradually recognizing the metal's potential, the dynamics of the market are shifting. The historical resilience of gold, coupled with its outperformance against major stock indices over the past 24 years, underscores its unique position as a safe haven and a store of value. While skepticism and a lack of investor enthusiasm have kept gold mining stocks undervalued, the tides are poised to change. As the price of gold rises and sentiment shifts from fear to greed, we're likely to witness a renewed interest in mining equities, potentially igniting another significant rally in the sector. For now, gold's upward momentum appears unstoppable, with the potential to double, triple, or even exceed those levels as it faces little resistance ahead. As Peter Schiff and other experts suggest, this is a moment to pay attention to gold, not just as an investment, but as a critical part of a diversified financial strategy. The metal's enduring value through centuries of economic upheaval makes it more than just an asset. It's a testament to stability in an increasingly volatile world. Whether you're new to the market or a seasoned investor, the unfolding journey of gold is one you won't want to miss.